Hello again. It is Thursday, the 12th of February, 2009. This is Brian Shannon from alphatrends.net, and we had another really wild session here today. At the end of the day, though, the NASDAQ did finish with a gain of 37 cents or 1.23%. Yesterday, we were looking that the market was holding above that confluence of the 20 and 50-day moving average, and now we've seemed to have gotten a very nice bounce from that level after experiencing a pretty dramatic shakeout during the day, and we'll take a look at that momentarily. Let's take a look at that right now. First, we started the day with a gap lower here on this 2-minute time frame. The market then rallied, nice series of higher highs and higher lows. That broke down, and then we saw this lower high and a pretty fearful test of the lows for the day. It seemed like they were really going to push them lower, but then the market just exploded higher. And you can see here that here's those lows, looking at the 10-minute time frame, that we were holding still above the, let's go back to the 30 actually, above this trend line, and also this level here at about 29.60 that we've been looking at, and also the 2/3 retracement of the lows from mid-January to the recent highs. So there's a few reasons to be optimistic that we do continue to hold above the above that trend line. If we take a look again at the VWAP, the average price the NASDAQ is traded at this year is about $29.80, and that's coming up a few pennies each day. We saw a little bit heavier volume today. We are still, though, realistically in the middle of the range here, that range being 28 to about 31.5. And of course, when you look at the weekly time frame, we've still got this bigger mess. If somehow we can break above these highs, though, then perhaps we're going to get a further bounce higher. And you've just got to be extremely quick in this market. I was aggressively short near the lows, and made a good recovery, or made a good cover and made some good money down there. But I wasn't quick enough to get long in here. I was thinking, well, it's going to slow down, maybe a low volume pullback near the VWAP or something, but it just exploded higher without me. So, there's plenty of opportunities, long and short, in the same day, and the sellers really controlled it for a while today, but buyers got it back at the end of the day. So there's a real tug of war, real battle down here near this 50-day moving average. And optimistically, you could say that this market is absorbing a lot of bad news without any further real damage to prices. The financials, they looked like certain death almost today as well, but they recovered and closed with still with a loss, but a loss of only 12 cents when you see that it had gotten down to the low end and actually tag that trend line. We're still within this triangle here on the daily time frame. We're also still below last year's closing low of $9.40. When we take a look at that on the 30-minute time frame, we can see that triangle kind of tight. The range is tightening. We broke slightly below it, but and below these lows here. But the market wasn't able to just find that complete give up in there, and we do remain again below the important $9.40 level, and also below this 5-day moving average, which is declining. So you've got to be aware here in the NASDAQ as well. I meant to point that out, that this was a prior level of importance. If you remember, $30.60. It's really about $30.80. Okay, let's call it $30.80. $30.80. Maybe we're going to get a continued move up to there tomorrow morning, and then ideally, what we'd like to see is a lower volume pullback, hop above that 5-day moving average, hold above there, and then go on to challenge these highs once again and perhaps push through. We've got to be, again, open to any possibility in this market, because if you're not prepared for anything, you're going to find yourself surprised, and you're going to find yourself in losing positions quite often, just because the ferocity of these movements. And here you can see on the financials that it had been kind of a choppy morning. We then broke down mid-afternoon, and this is where that rally began. It didn't even halt below the VWAP, just pushed right up through there and closed pretty close to the highs. And you see this this afternoon we had some pretty heavy volume in here. If we look at on a 5-minute time frame or 10-minute time frame, you can really see that heavier volume here at the end of the day. So 940 remains a very critical level for this market. Hopping back above there doesn't really change anything, but it just puts us, puts the bulls at a little bit more ease, I think. And then the trick will be to hold above there and see that level 940 hold as support. Then perhaps it can go and work on some of these bigger areas. But the market still has a lot of issues, and as I said yesterday, you can't get locked into a belief here if you're going to be a short-term trader. It's just it's too quick, it's too volatile. The semiconductors continue to hold on their trend line and above this prior level of resistance at about that $17.50 level. If we take a look at Fibonacci on here from the January lows to the recent highs, we can see that it's been holding at 50% retracement. So 17.5 remains an important level of support for the semiconductors. Breaking below that is what would be reason for concern. We're about 1740, let's call it. We've got a little bit of resistance here at just under $18 a share. Just above that, we have these prior highs here at 1840, and that's where we find the declining 5-day moving average as well. So we still have to be aware of any possibility in here. Realistically, on the daily time frame, it is looking, it's looking more neutral than anything because we're within this range. But what you should notice is that we've got what's looking like a pretty healthy volume pattern. That we had this, this volume on these 2 days of pullback was below the average of the last 20 days, and we've seen some of the heavier volume days it result in big moves higher. We also have a rising 10, 20, and 50-day moving average on the daily time frame. Still not clear. The only thing that would really make it bullish is getting above these highs. Getting above those highs, then I think you would look for the election highs and look at some of these other areas as well. But it's more neutral than anything. Markets correct by price, and then they correct through time. And those time ways, consolidations can go on for a long time, so you can't get too excited when they get up near the higher end of those range, but you have to be aware that the possibilities of a potential short squeeze. Again, the markets withstood a lot of negative news in here recently. Short term, we've got resistance at about $18 a share here in the semiconductors. Just above that, again, at about $18.60, we have the declining 5-day moving average and this prior level of resistance. So it doesn't seem like it's set up for a big move, but let's not impose our belief on the market. Instead, react to what it gives us and be aware of what the potential outcomes are in there. The Russell 2000, this market was looking like it had broken the trend line. Obviously, as I often say, breaking a trend line doesn't mean that anything's happening other than the rate of ascent has changed, and we're more neutral. What changes that is either really a break above 47.60 or so, or a move really below 42.75. That's really the range that this market is locked in for now. The more it trades within this range, the more energy it builds. So then, when you finally get a directional movement, it can result in something bigger. And while the weekly time frame is still in a downtrend, we do have the possibility of a lower high here. So again, there's no clear signs. You've got to be very quick in here on the short-term time frames. Let me do this. I'll put because I talk about these sometimes, but I don't always have them on here, and that is show the pivot lines. The pivot lines, just Google pivot analysis to find out about it. A lot of people, whenever I mention them, email me for information about it. But Google pivot lines or pivot analysis. I was getting short aggressively with the TZA. The TZA is a triple leveraged short. So when the IWM declines 1%, what the TZA is designed to do is to advance 3%. So you're getting triple leverage, but you're going long and you're getting short exposure. So I was getting aggressively short in here, and I said I was going to cover on Twitter. I was saying I'm going to cover a portion of it down at 43.60 because that's S2. Not that there's anything magical about S2 other than the fact that it's a widely watched level. So I want to know, when other people are looking at something, is it becoming a self-fulfilling prophecy? And a lot of times with the pivots it is. So I covered some in there. And then as it started moving higher right in here, I'd said on Twitter, this is where I'm out. I'm covering flat, locked my profits in. It rallied up big on volume here. I was thinking it was going to, pull back, test that VWAP. I completely missed the afternoon rally. But when you look at where it got us, it really didn't, it didn't change anything. Again, we're still locked within this range. We've got a big level of potential resistance that's been around for a while, near 46. We did, bullishly break this little pattern of lower highs and lower lows. Ideally, a pullback and then a test of that 5-day moving average, then a pullback from there. So as we stair-step higher, leap above it, that's the potential for the bullish scenario. But back to the daily time frame, we're still within a range. So I still believe, and I've been saying this for over a year, that it's really more of a trader's market than anything, and that's where where you ought to be focused. So short term, just about 46 is an important area. Let's see what happens with this declining 5-day moving average as well. The market did seemingly get a little extended, so maybe it pulls back towards. I think maybe 44 and a quarter would be okay, and then launches higher. But let's take a look at the S&P finally. The S&P finished with a gain of 6 cents, and that at a couple points during the day, if someone said, hey, the market's going to close positive today, you would have thought they were nuts, which is why, again, you have to have an open mind. But this trend line was broken. We had taken a stab at this low as well right here from what date is this? About February 2nd, February 1st, early first part of the month. Still holding above that 80.5 level. That's more important. $80 a share. Here we've got the range for this market is basically 80 up to about 88 rather, and 88 obviously is the level that we had backed off from about a week or so ago. 86, of course, is that other big level that's been important, easier to see, more emphasis on that from the hourly time frame. But let's go back to this 30-minute. We had seen again that this market came down and tested this low right here, and this was actually, that was February 2nd, and held above the 80.5 level. Then we got this big bounce, real big move here late in the day with a lot of volume. So it remains a trader's market. We've got some resistance, most likely going to be found between 84 to 84.5, and this 5-day moving average will likely come down and meet it in there. Tomorrow is Friday, so it's Friday before a long weekend as well. So it's going to be just more interesting. Day trading basically.